So I've had a question from a viewer named Chris, and he asked, "Hey Aussie Share Trader, you spoke about your long-term portfolio in one of your vids. Can you tell me a few ASX shares you like long-term?" Well, Chris, I'm going to do better than that. I'm going to give you my top 10 shares that I'm looking to hold for the next 5, 10 years, maybe longer. Stay tuned. G'day guys, Darren here, the Aussie Share Trader. Okay, so I'm going to give you my top 10 ASX investment stocks. So I know this is a channel about share trading, but I just had this question from Chris who asked about my investments. So I'm going to give you my top 10. I'll do 5 in this vid and I'll do 5 in the next vid, which I'll put up next week. So look out for that one. Now, before I start, because we're talking about specific stocks, I just have to read out this small disclaimer. I'll be quick. The information in this video and the links provided are for general information only and should not be taken as constituting professional advice from the Aussie Share Trader. The Aussie Share Trader is not a financial advisor. You should consider seeking independent legal, financial, taxation or other advice to check how the information relates to your unique circumstances. The Aussie Share Trader is not liable for any loss caused, whether due to negligence or otherwise arising from the use of or reliance on the information provided directly or indirectly by use of this video. Okay, so basically do your own research. These are my 10. So just make sure if you do buy any of these that they fit with your strategy in the long term. Okay, so if you've watched any of my videos, you would have heard me talk about this share and tell you that it is my favorite share on the ASX, and that is REA Group. Now, this, as far as I'm concerned, REA Group is about as close to Google as the ASX gets. This company has the potential to be massive in 10 years' time. Currently has a market cap around $10 billion. It's a digital advertiser, currently specializing in property, real estate, and spreading that footprint all around the world through Europe and China and the US. It has sites in all those countries. It currently is trading around $77 per share. That's of the 21st of November today, which may look a little top heavy. It's had a pretty good run from the mid 60s up to this, so up about 20% over the past couple of months. So maybe it does look a little bit top heavy right now. But remember, we're talking investing here, so I'm talking 10 years time. Where is this company going to be? And I think we'll look back and say $77 was dirt cheap for something like this. Now, it's in the digital space, so there's always a chance that a disruptor can come through and just wipe out a lot of their business. But we're taking risk here. Even with investments, there's risks. So REA Group, my favorite stock on the ASX. I love them for short-term trading and for long-term investing. I don't think you can go too wrong with REA. Okay, my second favorite stock on the ASX, which I have spoken about before as well, is Downer EDI. They're a diversified company. I don't know how you even describe Downer. They're in the infrastructure space, they're in mining and rail, and they're the company that will do whatever you want it to do. If there's a dollar in it, and it's legal of course, they will find a way to do it. They're just the sort of company that'll make money in all markets as far as I'm concerned. One of my favorites. They just seem to be, they had a contract recently for solar panels, and I don't know how experienced they are at solar panels, but it was a $200 million contract, so I thought, hey, hell, let's give it a go. So they're just that sort of company. I like the way that they think. They're a $4 billion market cap, so they're still relatively small in that space. But the infrastructure space that they're in, I'm pretty confident or positive on that space over the next 3 or 4, 5 years. So there's others in that they compete against, your Worsley Parsons, your Monadelphous, CIMIC Group. So there's a few there that they're competing against. This is my favorite of that lot, and it's a space I'm happy to be in over the next 3 to 5 years, maybe longer. So down at EDI, they're currently about $6.65 as I look. So they're sort of suffering a little bit at the moment. They look relatively a good buy even at this level. So have a look at down at EDI, put them on your list. Okay, the third stock, and I have spoken about this one as well in my trading videos, and that is Treasury Wines TWE. They've got $11.5 billion market cap, so you know they're pretty big. They're a global wine company with household name brands such as Penfolds, Wolf Blass, Rosemounts, and many others. They manufacture and sell wine all over the world, and what's exciting for this company is that their market is getting bigger and bigger as China and Japan and Korea and a lot of Asian countries really develop a taste for our premium product. So there's plenty of potential for this company to grow exponentially over the next 10 years. And while I'm not a wine drinker myself, I do like the way this company operates. And if I do drink wine, I always make sure I buy a Wolf Blass or a Penfolds to support the company I've got shares in. So they're currently about $15.75. Again, they've had a pretty good run over the last few months. So they look maybe fully valued right now. But I think if you're buying now for the long term, you don't have to worry too much about that. So Treasury Wines, definitely one to put on your list for a long-term investment. Remember to do your own research. Okay, the next one is another share I have spoken about on my trading vids. I spoke about this one, I think it was back in June or July, so a little while ago. And that is WTC WiseTech. Now, they are a developer of logistics software for cargo companies, shipping and cargo companies. They have had a massive run. And looking at their chart, they've gone from $4.70 right up to, what are we at, $12 today. So they're valued at about $3.5 billion. And for a company with revenues of a couple of $100 million, that looks a lot. So I must admit, at 12 bucks, the price does concern me. It does look overvalued at this stage. I would hope that they would come back a little bit if you're going to buy into these. But if you're looking 10 years from now, we may be looking back thinking, well, 12 bucks was a bargain for a company like this. The management are onto it. They're heavily invested into the company themselves. So probably out of the ones I've mentioned so far, this probably has the most risk. Like I say, it's very, very well valued at $3.5 billion for their revenue. Looks top heavy right now. Does worry me a little bit, but exciting company nonetheless. And looking long term, I'll be happy to hold these. That's WiseTech. And the last one for today, number 5, is TPG Telecom, TPM. They've got a market cap of around about $5.2 billion. To me, this company is all about David Teo, the managing director. He's a visionary in my eyes. I like the way he goes about business. He's taken this from nothing to where it is today with a $5 billion market cap. So you'd have to commend him on what he's done so far. This is a space that the telecommunications space has been massacred, as we know, over the last few years. You wouldn't have wanted to be holding Telstra for the last 10 years. It's been a terrible stock. And there's also Vocus and a few other smaller players. This is my pick. If you're going to be in that space, I definitely think TPG Telecom is the way to go. They're a full service telecommunications, so they've got the mobile, internet, cloud services. They've also recently got a mobile license in Singapore, so they're going to be expanding out of Australia, and there's no reason with David Teo's vision that this couldn't be a major world player in 10 to 20 years from now. Look, Telstra had the opportunity, they've never taken it. You know, they didn't know what to do with all their cash. David Teo's just come in and really shown them what Telstra should have been doing for the last 20 years. So I've talked about David a lot. I like David Teo. If you don't like David Teo, you wouldn't buy this stock, because basically TPG Telecom is all about him. So to do the research on a company like this, really look closely at the managing director, and because he's what it's all about. So there you go. That's 5 stocks. I've got 5 more to do next week. Now, a few things. I am out of the country as of Friday, so my video for the last trading day of the month, I'm not sure if I'll get it done. So it may be done early next month, around the 3rd or 4th of December. As I've said, December can traditionally be a fairly quiet sort of month, so there may not be a lot going on anyway. Other than that, I can't think of anything else. I've started using Snapchat. I did my first snap today. So if you are a user of Snapchat, I'll put my code up. That's my snap code. So if you know what to do, you just point your Snapchat at that, hold your finger on it, and I will show up there, and you can follow me, because I'm going to be a bit more active on that in the coming months and into next year as well. I had something else, I can't remember what it was. Anyway guys, thanks for watching. I'll see you next week with the next 5 shares. Have a good day.